So, ladies and gentlemen, let's look at SMC in 5 minutes, strategy in 5 minutes, basically. So, here's we're gonna combine market structure, the confluence, premium versus discount as well. So here's the confluence. In our strategy, what we're looking for is three elements to be in line to get a high probability setup. I'm gonna repeat that. For us to get a high probability setup, what we're looking for is these three elements to be in line. For an example, if we are looking for the direction and we find that the trend of the market is to the upside, so that means we're looking for buying opportunities, right? Then the next question is where? That's when you need to start looking for the level, one specific level being the demand level, because we buy at demand, right? And then lastly, you need to see a reaction or a signal at that level in the form of a candlesticks, most of the time, a hammer or a pin bar with more rejection on the downside of things. Vice versa, when we are looking for a downtrend, right? As soon as you see that the market is in a downtrend, what you're going to be looking for is the level, one specific level being supply level. And then once we get to supply level, wait for the market to tap into supply and give you a signal, which is going to be a shooting star or a pin bar with a rejection on the upside. Now let's look at market structure. As the market is moving, right, as you can see, it's a downtrend, pushes up again, moves to the downside, breaks structure on the left hand side. As long as we're breaking structures on the left hand side, it's a sign that the market is bearish, right? And then we draw our supply area, that gray zone there, and then we place our trade, right? You can use a fixed R method. Like here, I like my R method to be 1:5. That's the risk reward ratio. And then the market breaks another low on the left hand side. You do not sell here. You wait for the market to come up to a supply area, which is also a premium price, which we're going to look at shortly, right? And then the market makes another low, break structure on the left hand side. We're anticipating the market to make a lower high and then push further to the downside, but it didn't do that because market structure has shifted now, or what we call change of character, right? After the market has changed character, we do not buy here. We always wait to buy for a cheaper price at demand, at discounted price. Always, always, always. Here's the market pushing up, and then it violates the last higher low. So that's a sign that the market is shifting from an uptrend to the downtrend now. And then we do not sell here, but we would rather wait for the market to come back to a supply area, which is in a premium price zone, and then we're going to sell to the downside, right? And there we have it. Premium prices, discounted prices. Always when you're selling, you are looking to sell at prices that are a bit higher or above the equilibrium, which is 50%. And if you are in a buying or in an uptrend, you're looking to buy at this level, at discounted level, right? So now let's try to analyze this pair. We're on a daily time frame. This is the US dollar versus the Swiss franc, right? So from the grand scheme of things, you can tell that this is a bearish market, right? Lower high, yes, lower high, lower low, lower high, lower low, lower high, lower low, right? So we want to make a lower high and then push further to the downside, right? So, and then what do? We take our premium versus discount tool from that high to up there, and then here's equilibrium. As you can see, these supply areas, they are within our premium area. So what we're waiting for is a reaction at this space. So we're not going to see it here, but if we step down to a 15 minutes time frame, there's a high chance that we can see that, right? And then we're going to mark up the minor structure now. So this is the minor structure, market pushing to the upside, right? Towards our point of interest. So yeah, we have a higher low here, we've got a higher high, we've got a higher low, higher high, higher low, higher high, higher low, and a higher high over there. And if we zoom into price, what we're going to see is that the market has already reacted to this point of interest. So what we're waiting for is a break of this low and for the markets to continue pushing to the downside like that. So let me go to a 1 hour time frame to show you what we're expecting on the USD versus the Swiss franc. So yeah, there we go. So we're expecting to sell. So it's either you target this low, this low, this low. It's up to you. So as long as I get my 1:5R, I'm good. So yeah, there we go, ladies and gentlemen. I hope that was helpful. I was trying to do that under 5 minutes.